Enter casino. Hello, hello. Wait, how come I can't see this? Hey, Noel, how are you doing? Hey, Alexa. Hey, Tony. Hey, Alexa, and Mustafa. If you guys can hear me, I guess you can, because you just said fine, excited. If you can hear me, you can see my screen okay, just let me know. I just want to know everything's set up okay before we get started. And also what I like to do is that if you can, let me know where are you joining me from. I love to find out where everyone is tuning in from. Hey Jake, how you doing? Fantastic. I like to see the different places. All right, so today we will be going through a live trading analysis. So what I'll be doing, and it's going to be a little bit different today. We do have not just me, but we have two of us here for the session. So I'll be doing one part of it, and then I'll pass it over to Jianing for another part. So please, if you have any questions, let us know. We'll be happy to go through some trades setup, some possible trade setup, some analysis together with you, and to help you with your possible questions. All right. I see a hand up already. So if you have any questions, put it into the chat. Put it into chat. I'll be super happy to get to that. I'll give it one more minute before we get started. So get your questions ready. Any pairs or charts, we'll be looking through all that. Hey Henry, how you doing? You ready? If you guys been trading well, if you have any recent trades that you got into, whether you made money or lost money, let me know, right? I'll be happy to break down those trades, get into the details, find out, whether you could have traded better, right? Held on to it a little bit more, or to close out a little bit early. Let's find out. Hey, Mustafa. Glad for you guys to join us. All right, so let's get started. So today, again, just a quick reminder, there's a two-person team today. We are going through the live market analysis, sharing with you our thoughts, our ideas on the markets, with quite a few high volatility events in the horizon. So it's going to be quite exciting. But what I need to remind everyone is that any information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. All right, so I'll be sharing with you, or we'll be sharing with you, thoughts, ideas about our opinions, our views of the market. If you are going to be jumping to any trades, make sure you do your own due diligence. Check your margin, check your leverage, make sure you don't over trade or over leverage, because those are the things that will hurt your trading account the most, even more so than a bad trade. All right, so do your own due diligence before you jump into any trades. Hey, Abu Bakar, glad you can join us, and Adishina as well. Glad that you guys can join us. All right, so let's get into it. That's done. Risk disclaimer all done. Now, looking straight into the news. All right, so looking straight into the news. Looking forward to this. Thank you. Great to meet you too, Lance. Again, if you guys have questions, put it into the chat. Any charts you want me to look at, put it into the chat. How I approach the markets, or how I start approaching the markets, is I always look into the news first. I look into the economics, get a good idea of where the market should be heading or where it could be heading. If there's any surprises in the horizon, then I look into the charts, into whether I should be buying or selling, whether it's a good time to buy or to sell. All right, so just do a quick recap here for you guys. Special recap for you guys is, let's look at the news over the last couple of days. Monday, not much happened. We saw prices trading according to trend, following the trend, the short-term trend, because there were no big surprises on the news. On Tuesday, actually, what we saw was a lot of PMI numbers being released, right? PMI numbers are the Purchasing Managers Index. It gives you a bit of a forward-looking view of the different sectors, and in this case, the services sectors and also the manufacturing. Eurozone manufacturing PMI, although it was green, and most will be very happy it's green, but it was a 49.8, got reduced to a 49.7. Okay, it's still in that contractionary phase. So it's actually in that contractionary phase for the Eurozone manufacturing sectors. And then for services, it went from a 51.2 to a 50.5. Borderline, almost within the contractionary phase. 50 is a number. If it's above 50, it's expansionary. Below 50 is contractionary. So it's at that borderline level right now. That's why we didn't see very good news for the euro dollar. We actually saw it dropping. But for the pound dollar, even worse news. Manufacturing PMI came out at 46, was a 52.1, well into, from that expansionary, now well into that contractionary phase. Services PMI from a 52.6 to a 52.5, slowed down a little bit, but let's see whether that's going to continue moving down, possibly into the contractionary phase into next month. Where the US dollar started to get weaker was when the US services PMI was released, right? It went from a 47.3 to a 44.1, way into that contractionary phase. And you can see, remember, 23rd of August, I'll show that to you on the chart shortly. Manufacturing PMI as well went from a 52.2, expected 51.8, got released at a 51.3. Okay, so now I'll switch over to the charts just to show you what happened on the H1 time frame here. Pardon my scribbles. On the 23rd, right, you can see that move towards the downside, that big move towards the downside, that weakness in the US dollar was because of that release of that PMI, right? The release of that PMI data causing that weakness in the US dollar. So that started that weakness. Moving on to the next day, on Wednesday, yesterday, we saw core durable goods for the US at a 0.3, not a big change, less than before, month on month, and durable goods at a 0%, no change on durable goods for the US from a previous month of a 2%. So again, bad news for the US. What happened on the 24th of August? We saw again the US dollar dropping strongly again. All right, so that explains, just in case you guys were wondering, that explains why we've seen that big drop in the dollar index. It was because of those two news events. With that said, would we be able to look at gold and crude oil and how we can analyze it, looking at fundamentals and technical before execute? Of course we can, Lance. I'll get to that shortly. All right, so with that, today, watch out today, watch out, is at 8:30 p.m. GMT +8. We do have the US preliminary GDP quarter on quarter. It was a minus 0.9%, expected a minus 0.7%. So looking like it's going to be bad news for the US in terms of GDP, and consecutive quarters of a negative number is going to put the US into a technical recession, right? Into a technical recession. So it looked like we might see, again, bad news on the US front, on the dollar index front, because of that GDP number. But with all that said, tomorrow starts with the Jackson Hole Symposium. Tomorrow starts with the Jackson Hole Symposium, where, if you look at the headlines, just looking at the headlines, Jackson Hole Symposium likely to underline current Fed strategy. Markets are expecting the Fed Reserve to come out and say, and to be a bit more hawkish, right? To comment about interest rates path, the path of interest rates increase, the way they're going to tackle inflation, and the impact on that economic activity. A bit of a worry is that if they do increase interest rates too aggressively, that's going to cause further slowdown in economic activity. And if that does happen, then we're going to see the US well and truly into a recession, right? So that's going to be a worry that if the Fed Reserve becomes too aggressive at the Jackson Hole symposium with their interest rates decision or their path towards interest rates increase, we could see the US enter into a recession. And if the US enters into a recession, that could lead to a global recession. Okay, so we want to see a positive Fed Reserve, but not a too and overly aggressive Fed. Okay. No, I think it's starting later today. In terms of put to the time, not the Singapore time zone, get it to the London time zone. It's starting right about there, right? So it's just about to start. Based on Singapore timing, it's tomorrow, but it's just about to start today. Okay, so Jackson Hole Symposium starting, but the main thing to look at is also when Chair Powell is speaking. 3 p.m. GMT time on Friday. That's when he's likely to start talking about his policy path. Okay, so those are the things to pay attention to. We do have a whole bunch of news into next week, especially with the CPI data, and more importantly, if I scroll through everything and show you on Friday, we do have the US non-farm payrolls to be released next Friday. So a lot of news to be had from today all the way through to next week. If you're trading consistently through the week, please make sure you trade safely as well. Okay, so with that, let's look into the charts. This was an analysis I was just doing with one of the traders I was coaching with. The dollar index fell, that's the trend line towards the upside there, tried to break below. It's being resisted or being supported by that 23.6 level. I'm thinking that if the news tonight does come out with the GDP number weaker, then we could see the dollar push towards the downside. If it breaks below 23.6, test that 38.2 level and bounce up. If it's going to be a bit of a priced-in scenario, then we could also see this form a good support level for the dollar to push towards the upside. Frankly, I would prefer it to drop before moving up, gives it a bit more space to push towards the upside. All right. So back to the question from Lance. Let's look at gold and crude oil markets. I know Jenny will go through a little bit more detail, but I just want to share with you this is that I was looking at gold, right? It has been dropping. We were calling it at that 1807 level. It's dropped. This recent move on the upside for gold is because of that weakness in the dollar, right? That weakness in the dollar, you can see on the 23rd, as the dollar weakened, we saw gold push towards the upside, supported by that short-term trend line towards the upside. Thinking that it could continue towards the upside if we see dollar continue to weaken. I think that gold could climb towards that 1772, 1778 level, formed up by that 61.8 level on the Fibonacci towards the downside. Okay, so looking at that, less news affecting gold prices. Gold prices usually more dependent on the overall fear or doom and gloom feelings from the markets. If we're talking about global recession, then we're going to see gold climb higher. There is some correlation between gold and the dollar index. It's not a perfect correlation, right? So don't, a lot of times people talk about the inverse relationship between gold and the dollar. It does have a relationship. It's not perfectly inverse. There is sometimes a little bit of lag between that relationship. So just be a bit careful. If the dollar weakens, it doesn't always mean that gold will strengthen, but sometimes that does work out, and we could see it come towards that resistance before possibly turning back down again if we see that dollar strengthen. All right. Hope I answered part of your question there, Lance. And now for that second part is with Brent. All right. So with Brent, one interesting thing is that we've seen it climb and hit that almost that 103 level, right? It was very recently, just in mid-August, it was at that 94 level, and then now big jump over the last couple of days, big jump towards the upside. The reason why we've seen Brent climb in this move here and in these moves here towards the upside to test that resistance level is because of, let me see if I can find it. Where is it? Give me a second. Nope, don't find it yet. OPEC, okay. OPEC may lean towards output cuts if and when and if uranium production returns. So output cuts suggested from OPEC. And then also there was one more news where the Saudi minister, oil futures discount may force OPEC action to cut production, right? So this was back in a couple of days ago, August 22nd. That's why we actually saw on the 22nd night, we saw the push towards the upside as Saudi and the OPEC Plus group threatened. And now I think it's been confirmed or semi-confirmed that they will be cutting production on oil, right? So they're cutting production, reducing the supply, causing a somewhat of a supply crunch, causing prices to climb. So that's why we saw that push towards the upside on Brent and also on WTI. Expectations at this point, I'm thinking that we could see price consolidate at about that 103 level, but push towards the upside. The next high point would be at about that 109 level, right? Next high point would be at one, or next very high point would be at 109. You do have another high point at 106, right? So if price does climb up, push above that 103 level, we could see it get towards 106, possibly towards 109 if the scenario gets very drastic. Are there charts for oil similar to that of currency pairs that show if they can be affected by high impact news, or these commodities behave differently? It does behave a little bit different. Actually, I'm not sure what you're asking. Are these charts? Are there charts for oil similar to that of currency pairs? This is a oil chart for similar to a currency pair. They show if they can be affected by high impact news. This is it. This is it. This is the Brent chart showing you the price movements as is affected by the news coming from Saudi about a production cut. Commodities do have a little bit more factors that can affect it, not just production levels. You know, if we start talking about a global recession, expecting lower economic activity, that could lead to less travel, less industry activity, less demand for oil. Okay, so we could be looking at those. Okay, I mean a timetable for news like the one we looked. Oh yeah, there's hang on, let's go to that. Back to Forex Factory. You can look at natural gas storage. And also yesterday we had crude oil inventories. So these will be the news that has an impact. But bear in mind, these are inventories. So it's about storage. That's about storage. It's not so much about production. Production does have a, let me find it. There is an OPEC meeting as well. Oh no, it's next week. Let me find it. Give me a second. There you go. So Thursday, September 1st, we do have an OPEC meeting, right? OPEC MMC meeting. So we're looking at, and that's why there's all that talk about possible production cut levels, production level cuts and all that is in the lead up to this meeting where they're going to confirm, right? Now it's almost confirmed they're going to table it at a meeting and then release it in a statement that they're going to cut production levels or not cut production levels. So I think that's what you're looking for in terms of news. That would be, in this case, on September 1st, on Thursday, OPEC meetings that would have a big impact onto the oil prices, natural gas storage as well, in those sense. All right. Hope I answered your question there, Peter. And then what else? One more to look at. I'll share this with you. This was a really interesting one. The US Swiss franc, right? The US Swiss franc seems like it might not play out at this point, but it's a good analysis here. Is that we've seen the US Swiss franc trade towards the downside. This is on H4 time frame. I was looking at it as it was at this candle looking to break lower. Main thing was we had an upward trend line and price looked like it was breaking that upward trend line. And then there's a horizontal support level that, hey, price was looking to break below that point as well. And with a Fibonacci level towards the upside, a 23.6 level, all within this area here, right? So all within this area here with a confluence of trend line breaking the support level. If it does break below that Fibonacci level as well, I was looking for further downside on the US Swiss franc towards that 61.8 fib level, which also coincided with that 0.95 round number support towards the downside. So looking for that area as a bit of a support, right? So that's why I was considering a possible sell. In this case, about a 30 pip stop loss, about a 100 pip take profit, a 1:3 risk reward ratio towards the downside there for the US Swiss franc. Unfortunately, at this point, price has bounced. 23.6 seems to be holding as a good support level, right? So looks like the idea might be invalidated if price does come back into that trend line and possibly push towards the upside. What's the best session to trade the US Swiss franc? I would say it would be during the Euro session. So after 4, after, you could do a bit of conversion for me now, but after 4 p.m. GMT plus 8. But you can see that most of the move on the US Swiss franc is going to be driven by the dollar index, right? By the dollar index. And because of that, we could say that the US session will be one of the better sessions to trade the US Swiss franc as well. Quite a good representation of how the dollar index moves could translate to the US Swiss franc. All right, hope I answer your question there again as well. With that, I'll do one more analysis. What was I looking at before? Yeah, that one. So pound dollar on the H4 time frame, big downward move, found a very strong support level here at that 1.1777 level, right? At this level, strong support, bounced back up. I'll take that line away just so it's easier to see. But it's been resisted. It seems to have found a resistance at this 23.6 level, right? So initial expectation was that, hey, can pound move towards the upside? Very unlikely, I think, the way the UK is, inflation is high, still climbing. I think it's about 10% now. They're expecting 15 or 18% by 2023. So inflation is high, interest rate is high, and economic activity is low, putting the UK into a stagflation phase, right? They're likely to be, or to be confirmed to be in a stagflation phase. And with the political uncertainty looking at, still selecting the next PM, further uncertainty, further downside likely for the pound dollar. Would, as an immediate trade, again, make sure you do your own due diligence, look for that rejection of that 23.6 level, a bit of a repeat of what happened yesterday, reject that move, trade it back down towards that 1.1765 support level. And if price does break from this point, if it does break down from this point, especially that 1.1720 level, the next key support level is very far away, all right? Where's the next key support level? If you went to the daily time frame, zoomed out, and went all the way back, next key support level, you can look at it way there in the corner there at 1.1467, all right? So coming back to the H4 again, if price does break below, then big significant downside towards that 1.1467 level. I'm not saying that it'll get there in a hurry. I'm not saying that it'll get there in a straight line, but we could see the pound dollar trade lower, especially if it breaks below, firstly, that level, and then that next level towards that 1.1467 level. Alrighty. Any further questions? Couple of trade ideas there. Just remember, if you're jumping into any trades, do your own due diligence. Make sure you don't overtrade, don't over leverage. With that, I see some people typing. Okay, not yet. All right. Let me see, what was the last one I was going to look at? That would be it. That would be it for now. What I'll also do is to, okay. All right. So if you don't have any further questions for me, what I'll do is I would love to introduce one of our team members here. So Jianing is going to be guiding you through some of her thoughts and analysis on, I think, Aussie dollar. I think I did some of her currency pairs as well. So, she'll share with you her thoughts, her views, even if it's the same chart. Different people looking at a chart will have a bit of a slightly different view, which could help as well. All right. So here we go.
Hi guys, very happy to meet you here. I'm Jianing. I'm joined the team just now. So now let me help you to let me share some of my idea. Okay, so do you have any desired pairs so I can follow your request? Or maybe we can have the Kiwi dollar first. Okay. Okay. Okay, now let's start from the day chart. I will take a look at gold later. Okay, so let's firstly have a look of the Australia dollar and CAD. So let's go first of the day chart to have a general idea about what the market is going to. So you can see from March, I think the market is really consolidating and from this year, and you can see from March, you can see the trend is a descending trend, but for the recent 2 months, the price is going up, right? Here is going up. So I put it into green. Okay, so now let's have a look of the 4-hour chart. Okay, for the 4-hour chart, I think although the price here is a short-term descending trend, but now the price is still within our ascending trend line. So from and we can have a look of the Ichimoku cloud. We can see the price is still going across the Ichimoku cloud, but it's testing the resistance of the Ichimoku cloud. So for me, I think maybe the price may go across the Ichimoku cloud. Okay, so now let's try to find some key levels of the Australia dollar and CAD. Okay, so I think the current resistance level could be here. So we can expect the price to reach this level first. And if the price can break this level, maybe we can expect the price to go all the way to our current swing high at around 0.91025. But if the price break if the price cannot break the resistance of the Ichimoku cloud, if it's going down in the recently, maybe I think here could be our first support line. Okay, here could be our support line. And then I think here the price at 0.89504 here could be our intermediate support line. So now let's try to find some Fibonacci levels to help our analysis. So firstly, here is our swing high, right? And here is our swing low. So you can see the 61.8 Fibonacci level here is a very good overlap with our first resistance. You can see here is our first resistance. And then if we use here is our swing low and here is our swing high. So we use this level, like I think 50%. Yeah, you can see 50% here is in line with our first support line. So if the price will reverse the ascending trend, it may go and then it will go up to go down to our first support at 0.89127. Okay, that's my analysis for the Australia dollar and CAD. And then I have a look at the gold. Did Jim do the gold before? I think he covered a little bit. Yes, as okay, to shortly answer your question, Peter, I think if you have a look of the gold, maybe you can have a look of the DXY at the same time because it's very strong related. So the two main things to affect the price of gold, the first one is the price and the trend of the DXY, like the US dollar index, and another one is the current sell and buy situation of the investors, right? And now we have a look, maybe I think Jim covered the trend of the gold just now. So I just highlight some very important levels of gold. I just delete out the joins here. Okay, I see. You can see because the DXY is showing a descending trend currently. So you can see here, right, the gold is moving as a pullback because I think gold really suffered from a dropped recently, but here is a small pullback, right? Because of the US dollar is dropping. So I think maybe we can wait for a while to wait for the meeting come in the next few days to see where will the DXY going to. But from me for now, maybe we can try to highlight some important levels. So the first one here is our key resistance level, support level. And if you go all the way back to here, you can see it's a resistance and is here is a support. So here is a overlap. So here could be our strong support line here. And then if the price go up, it may all the way go up to here. Here is our 1,800, right? Here is our resistance. But I think maybe we can wait for a while before the meeting. I mean, before the meeting, I think the gold maybe have a short-term ascending trend. So I like to say if you want to entry the market, maybe because here the current candle is like dropping, right? So maybe you can wait for the candle to reach to our previous small swing high to here, and then maybe you can, yeah, if the price can go up to here, maybe you can enter the market. Okay, and then if the price go up, maybe I think price cannot go up to our first our key resistance level here, but for the short-term resistance level, I think here could be a possible one. So I just highlight this one. That's not very clear about your question. Maybe you can explain more for me. Like, for example, what do you want me to do for the gold? Thank you so much. Okay, so I think here could be our like the next resistance level. Okay, so so maybe we can expect the price to break the Ichimoku cloud, but sometimes the Ichimoku cloud is not very easy to break. But before the meeting, I think here could be a small ascending trend for the gold. Okay, and then we go for the USD. Okay, and then we go for the USD. So for the day, if we have a look at the daily chart first, we can see the here for the current month is ascending trend, but the price is pulled back for the recently. Okay, so we have look after for our chart. As you can see here, the price break the ascending trend line, and here is a small pullback of the price. Because why is have the pullback from the chart? We can see here is a key, here is a support level, so the price go from here to here and pull back for a little bit, but I think because the price is still under the Ichimoku cloud, and maybe for the recently, okay, I just, where's the, okay. I have a look of the day chart first. So from the day chart, you can see here is the price is still within the ascending channel. So maybe I can highlight the channel here. Can we do a channel here? As you can see, yeah, we can do a channel here. but the price is like testing the lower bound of the channel and is bonus up at this level. So for the short term, because if we draw a line here, then the price is still within the lower part of the channel, right? So if we have a 4-hour chart, yeah, we can expect the price to have a pullback trend for a short while, but for the long term, I think the price may okay, I think because the price is going within the pullback term, so maybe we can highlight a resistance level for this. So for the first resistance level, I'd like to highlight it here. Here is our previous swing high here, and if the price keep going up and maybe can reach this resistance level at the 34262. Okay, and we can try to use some Fibonacci levels to confirm our idea. So you can see here is our 50% Fibonacci retracement level. Here is in line with our first resistance, and then we use some another Fibonacci level as here. I think the 38.2 Fibonacci level is in line with our first spot here. Okay. Okay. And then we go back for the gold to have a look. The price is dropped from like so maybe we can use a daily chart. So if you have let me try to answer your question. If we can look at the drop from July the 1st to July 24th, and how we should have analyzed that position in gold. So you mean I trace the market to have a look of the price? Okay, so here is the price of July 1st, and then here is the price of July 24th. So here is I can see here is a significant descending trend, right? Sorry, I'm not very sure how to answer your questions, but maybe I will take note, and maybe next time I will try to answer your question. Okay, so now let's go. Sorry for that, because I'm not very clear about your question. Maybe I can discuss with my colleague later. So maybe we can go for some other pairs today. Okay. Maybe we can have a look of the QE dollar. So okay, we can removing the drawing first. Maybe you can have a look of the Forex factory for today. Thanks. For today, I like to share with the QE dollar. Here is let me see where it is. Wait for a moment. Let me try to find where the news. I remember I saw the news today, but why I cannot find it here? Okay, so I can describe for you guys. So today I saw the news is the core retail indicators of the QE dollar. That is like it was lower than the expected. It's like negative 2.3% for the QE for the core retail indicator. Actually, I cannot find here, but I don't know why I saw it just now. Okay, so just leave it away. So I want to share with you that sometimes if you have a look of the core retail indicator, if the price, if the current rate is lower than the forecast or lower than the previous, that means it will decrease the value of the QE dollar. So if the price, if the indicator today is negative 2.3%, we may expect a drop of the QE dollar, right? But if you have a look of the chart, you can see the price, from the news come out today, the price experience a ascending trend. That's why. I don't know whether anybody have think about this question or have a look observed this question before. So I like to share with you my opinion here, because QE dollar is against with the US dollar, right? If you have a look of the DXY chart, just now like Jane showed you before, here is a jump. Here is a drop of the US dollar. So sometimes from the fundamental part, we can see maybe it will bearish, but from the technical part is bullish. The difference is because the chart is also impacted by another currency. So sometimes the momentum between the two currency is battle with each other. So that's why today QE dollar is showing a ascending trend. So let's have a look of the QE dollar. So okay, let's have a look of the QE dollar today. So for the day chart, right, the price is for the long term, I think it was in the descending trend, but now the price is trying to break the Ichimoku cloud. But from the for our chart, we can see it's still with below the Ichimoku cloud, although it have pullback for the recently, because it's still within the Ichimoku cloud, and maybe we can draw a channel here. Draw a channel here. Here's my chart. Can we draw a channel here? If we let me try to draw a channel, but I think it's not doesn't work. Okay, what did I do? So give me a moment. Let me adjust my chart. Okay, so like to remove this chart. Yes, we can see as the price for the short term, the price has already break the descending trend line, right? But here is a pullback because because the US dollar is dropping, right? So maybe for the for currently we can try to find some key levels. So if maybe we can expect the news of the meeting happened in the few days. If there is a very aggressive of the increase of the interest rate of US, maybe the US dollar will drop. The US dollar will drop again, right? So then we can expect the QE dollar to go up. So the first resistance level, I like to highlight it here, because here is in line with a lot, several swinging high here. The price is testing this area before, and if the price can break this level, maybe we can expect the price rise to this level and 63817. And then if the meeting like have some good news for the US dollar, like although we increase the interest rate, but it's still within our control. So maybe I think the US dollar may go back to its strong ascending trend. So if that things happen, I think this pair the price of this pair may go up, go down and go back to its ascending trend. So the next supporting level could be here. Yeah, the next support level could be here. So if we have a look of the day chart, here is our key support level at 061057. Okay, so that's my analysis for the Kiwi dollar and US dollar. And do you have any other required pairs? I don't know whether we have already covered the USD CAD before. I think we haven't covered the USD CAD, so maybe we can have a look at it. Oh, give me a moment. Okay, let's have a look of the USD CAD. So if we have a look of the day chart, we can see the price is really consolidating at least from this year is consolidating quite well. It's showing a ascending trend, but the trend is not very clear. Okay, so let's have a look of for our chart. For the short term, maybe we can draw a ascending trend here, but the price has already break the ascending trend and is trying to break the Ichimoku cloud, as it's already testing the Ichimoku cloud, right? Okay, so for the next 24 hours, maybe we can expect the price is still within the ascending trend. So if the price can successfully break the Ichimoku cloud, maybe we can expect the price firstly go down to here is our first support line. Here is in line with our current swing lows. You can see the price testing this area for a lot of times, right? And here is our significant swing low. Okay, here is our significant swing low here. It's like 1027,285. And then if the price can go back to our ascending trend cut from the day chart, I think it's still within the Ichimoku cloud. It's tried to break it, but it didn't successful. Okay, so if the price go back to the ascending trend, our first resistance level could be here. I'll put it here. Is our first resistance level. And then if the price can break this resistance level, can be raise all the way to here. And then we try to use some Ichimoku cloud to some Fibonacci level to confirm our idea. Here, I think could be like 61.8 Fibonacci level here. Here is very close to our first support line. And then if you guys can see the picture here is a flash, right? It looks like a flash. So maybe we can I think you don't need to close out the running trade, but if you have a heavy position, like for the related pairs, maybe you can close it, but not out. But if you want to enter the market, my suggestion is maybe you can wait for a while. And you can see here is is a 100 Fibonacci projection. So we can see we can expect if the price can break this 100% Fibonacci projection, we can expect the price to go all the way to firstly touch the first support level and then to our swing low here. Okay. Okay, so I think do we have other pairs to go through? Because we still have like 4 minutes. Do you guys have any other required? Maybe we can have a look. If you don't have, maybe we can. I think Jay has already covered all the major pairs before, so maybe we can stop today and thank you guys for joining us today. And Lance, if I read your name right, I will take note of your question and have a discussion with my colleague. And after for the next webinar, I will answer your question. Okay, so please join us next webinar. Okay, thanks guys, and good morning, good evening, and good night. Okay, see you guys. Bye bye. Bye guys.